The Swiss franc and Japanese yen were in vogue in early trading as the emerging market sell-off rears its head once again. I'm Monica Gibson with today's press review. The traditional safe havens were catching all the gains as traders remain wary of EM assets amid worries on a slowing Chinese economy and the Fed's finger continuing to hover over the taper trigger. The dollar steadied at 102.5, having fallen to 101.77 yen, its lowest level since early December in early Asian trade when liquidity conditions were thin. The dollar has shed nearly 2% in the past 3 sessions. As Jane Foley said, emerging market currencies remain vulnerable to a sell-off if the Fed continues to taper, and that should keep the dollar supported. The sell-off started at the end of last week, led by the Argentinian peso. Since then, EM stocks have fallen to their lowest levels in 4 months, raising questions over contagion issues. Analysts at Credit Agricole shared their concern in a note to analysts which said the growing turmoil in emerging markets is inflicting damage on risk assets across the board and no let-up is expected in the near term. But there is also the debate about what started the EM sell-off itself. Was it merely individual domestic issues, Argentina letting go of its currency support, political tensions in Thailand, Ukraine and Turkey? Or did they combine issues relating to the world's 2 biggest economies in the US and China? Paul Dales from Capital Economics doesn't think the economic wobbles in the US will be enough to stop the taper train. He said the muted increase in payroll employment in December is unlikely to prevent the Fed from reducing its monthly asset purchases by a further $10 billion to $65 billion at the meeting that concludes on Wednesday. He added this is especially the case when most of the other evidence suggests that recovery has remained intact. Gold is holding most of last week's $16 advance to 2-month highs. The Australian stock market was closed for a national holiday, but the Aussie dollar is rebounding 0.4% to 0.87 against the dollar, after hitting fresh 3-year lows at the end of last week. Well, that's all from me for the moment, but for more currency projections, click back to the Dukascopy website for today's forecast programme with Dear McDermott. Goodbye for now.